talking about it, that November unemployment rate dropping to 7.7%, 146,000 new jobs added, far better than expectations. But lurking behind that number is the fiscal cliff. If Congress doesn't act, jobless unemployment benefits would go from a 73-week maximum down to 26 weeks. Could that force a spike in the jobless rate again for 2013? Joining us now, Todd Schoenberger, LandColt Capital Managing Partner, Mark Vitner, Wells Fargo Senior Economist. Todd, first to you. I know you weren't really thrilled with the numbers that came out today, but also you've got this issue of unemployment benefits and what that does to the economy. You worried?
Absolutely. You bet I'm worried. Look, if we leap off the fiscal cliff, Cheryl, you're looking at a minimum of 500,000 jobs eliminated. And I'm not talking about low-wage jobs either. I'm talking about the high 5 digits to low 6-digit jobs. That's going to impact the overall economy. It's not just here in the United States, though, Cheryl. It's also the global economy. So you have to start looking at some of those multinationals that trade on Wall Street. They're all going to be impacted. You
know, Mark, you've had some on the Democratic side, Senator Harry Reid, others saying they wanted to actually see unemployment extended for 2013. They argue that it's going to hurt the economy if we don't extend unemployment. Do you agree with that assumption?
Well, I don't think that's true, because extended unemployment benefits have been winding down on a state-by-state basis for quite some time, and it doesn't seem to be hurting the economy. I don't see how they're going to be able to extend them. I really don't. Not if they're going to come close to coming to some sort of agreement on the fiscal cliff. We can't increase spending. We're trying to rein it in, and so I'm not that worried about it. There are some distributional effects, though. A lot of the lower-end retailers, some of the dollar stores, some of the drug stores have been big beneficiaries from the extended unemployment benefits, and their business will likely slow.
You know, let me ask you something, too. You know, you brought up the issue of the amount of retail jobs. But, you know, Todd, those are lower-paying, lower-wage jobs. I'm assuming that is something the market doesn't want to see. Nice to see jobs added, but not the right type of jobs.
That's right. Look, 57% of the jobs that were part of today's report are of those low-income variety jobs: hospitality, leisure, retail, temporary jobs as well. We don't want to see that on Wall Street. What we need to see are really the high-wage jobs, because those are the jobs that are going to sustain a growing economy. They're going to be able to buy big-ticket items such as cars, a house, maybe even some durable goods items. That's what you really need to really grow this economy. And right now, we haven't heard any strategy right now out of Washington. All we're hearing about are extra taxes.
You know, I want to play this soundbite for you, and I want you to listen to this and react on the other side. You know, House Speaker John Boehner, just about an hour ago, he was asked about his phone conversation yesterday with the president regarding the cliff. Here's what he said.
The phone call was pleasant, but was just more of the same. Even the conversations that the staff had yesterday, just more of the same. It's time for the president, if he's serious, to come back to us with a counteroffer.
Okay, so Mark, we're nowhere near a deal on the fiscal cliff. It's pretty obvious now. What does that say to you?
Well, there's an awful lot of uncertainty in the economy. We do a survey of small businesses, and it's done through Wells Fargo. We contract out with someone. And in the fourth quarter, our small business survey fell by 28 points. It was the biggest drop in 4 years. And it's not so much that businesses are worried about the economy today. I mean, most see it as the conditions as being normal, somewhere between normal and bad. And they don't, but what's really disconcerting is what they see about the future. Their confidence in the future has really fallen off, and they're much more worried about future revenue growth, and also worried about how it's going to impact their cash flow. They're worried about the cost of regulation, and as a result, many are putting off hiring. They're putting off investment decisions. And collectively, that takes a huge toll on the economy.
You also had the labor participation rate. That's another issue. That's also an economic issue, Todd, and that's something that's separate from the fiscal cliff debate. At the same time, 229,000 people not looking for work, fewer not looking for work for the month of November. I mean, the giving up factor is huge here.
It's huge, and it has social implications. Look, it's right now you have zero confidence from any of the consumers, anybody out of work. Plus, you start looking at the top. We were talking about the extended unemployment benefits. If you lose your job, think about those Citibank employees, 11,000 of them. If they lose their job, which they are, 11,000 of them, but the majority of them won't find work until 2014. It's horribly demoralizing right now. So going forward, if you do leap off this cliff, which I believe we will, you have to suspect that you're going to have less confidence in the markets, not just globally, but obviously here domestically. And right now, Washington isn't saying anything with any type of a strategy on job creation.
But it's always nice to listen to them to say nothing in live news conferences. Todd Schoenberger, Mark Vitner, gentlemen, thank you very much. Appreciate it.
Thank you.
Good to be with you.